2014 is a strategic year for Nigeria as it's the penultimate year into the election period. And in 2014, the economic outlook, the investment strategies, and also what investors and economic players should be doing becomes the key focus. CBO Capital organizes its third annual Investors Conference, which brings together the market players and shapers to look at how the economy can thrive and also experience transformation. And one way is proper and accurate investments. Keynote speaker for today, Dr. Kingsley Moghalu, the Deputy Governor of the Central Bank of Nigeria, coordinating financial stability, looks at the election period and the investment prospects for Nigeria, making a bold statement that despite the election period, it won't affect Nigeria's economic growth.
The moderation in consumer price inflation reflected a trend which began in the fourth quarter of 2012. The anticipated agricultural bumper output is expected to lead to a further decline in inflation and to contribute to sustained macroeconomic stability. However, the threat of a spending blowout in the run-up to the 2015 elections does pose potential risks. We've talked about that. Not that it has happened, but we would be naive to assume that it will not happen. I mean, if it doesn't, we will be pleasantly surprised. But it is what happens in every country in the world. Nigeria is actually not particularly unique in this respect, and I speak including the advanced economies. However, from a monetary policy perspective, we must prepare ourselves to meet such a scenario. And we've said that therefore, if that means we have to tighten further, we will. Of course, we wouldn't like to, but we have a job to do.
And so, pre-election should not be a fear or concern for investors. Rather, more things should be looked at in terms of structure, in terms of engagement process, and in terms of the regulations. We also have various panel discussions. First, looking at the issue of private equity and venture capital. Also looking at how to raise funds for the Nigerian sectors, and also the asset management base in Nigeria.
In terms of fundraising, my perspective is that, especially thinking about the theme, the whole pre-election year, from my experience, what you find is that foreign investors are less bullish about the country when it comes to elections, especially those who have not experienced investing in the country. So they're really trying to see what is going to happen in Nigeria, especially given the current political landscape where it's not so obvious who's going to take over. Is it PDP, is it APC? Now we have a more cohesive opposition, shall I say. The challenge is, certainly from where I am sitting, I see that over the next 6 months, 6 to 9 months, a lot of different companies are going to go out there, both locally and internationally, in terms of raising finance. Because first we have the, what I'm calling the indigenization of the oil blocks, the large IOCs looking to divest some of their fields. So you have those guys out there already looking for money. You have the guys who've already bought the PHCN entities. Those who've already bought them and taken possession, because a lot of them source their money from Nigeria, they're now going to go out there looking to refinance to bring their financing costs down. Then obviously the NIPP process, we're just going into that. And again, you're going to see over the next few months, those guys, it's 10 assets, those guys are going to be out there as well looking to raise money. So I expect it to be quite tight, quite competitive, and it really is a case of the strongest sponsors will win.
One of the challenges you have in this market is being able to create a funding model that matches your project life cycle. That is very, very critical. Typical project life cycle is 36 months and above. And there's that of long-term capital out there. So it's important that you're able to create a funding model that enables you to match your assets and liabilities. So what we set out to do was to, as a matter of deliberate strategy, create that particular framework. Currently, BPDC, we are on sites on 7 project sites. We have 13 projects in our pipeline. We're talking of financing in excess of 50-60 billion naira And it's important that we are able to create a seamless platform to finance those projects. So the first thing we did was to issue a bond. So we had layers of strategies to achieve that. First was to issue a bond, which we did successfully in 2010. In terms of the issues that were involved, I think timing is very critical, and you also need to be able to convince the investors. You must have a story with the investors, understand that it's a good story. I believe we had a good story in 2010. We also came out at the right time. We're going to give you 15 billion. That bond was 100% oversubscribed, and it was at 10%. I believe it's still the cheapest. We're very grateful to investors for that. Now, on the back of that, we decided to float a real estate investment trust, because it's also important for us to be able to unlock value in our existing assets. So we should be able to create a vehicle to offload those assets and allow other investors to buy into that. And that we have also done. We've floated a REIT. That REIT was listed on the 1st of July. There are challenges in that process, regulatory challenges. We've made some progress in Nigeria. We're not where we should be, because basically we have to create a globally acceptable REIT vehicles. We're still regulating REITs in Nigeria as a form of collective unit trust. Okay, it's good. We're able to achieve some things, but we must create REITs as transparent, flow-through vehicles, which is where everybody is going all over the world. So there are countries who have accepted that model.
The various steps taken by government in the reforms is showing that there indeed is a transformation in place. You said in your presentation that elections does not predicate the situation of the growth, economy, investment.
Yes.
Can you just tell us why you boldly stated that?
Yeah. I mean, I don't see elections as anything that will come in between the process of Nigeria's economic growth, provided that the elections are stable, is a stable exercise and is peaceful. Once it's peaceful, then I don't see why it would interfere with the growth of the economy, because the fundamentals for growth are pretty much there. You see the power sector reforms that I spoke about. I believe that over the next few years, it will reposition Nigeria in a very different way. You see the move for individuals owning refineries, which will go into petrochemicals production, fertilizer production, and move the country away from an excessive dependence on imported products. And also cut the import bill and help us conserve foreign exchange, because most of the foreign exchange demand is for importation. And so when you're an import-dependent economy, everything now rests on the exchange rate, the foreign exchange rate. And that's why, as the central bank, we put a lot of emphasis on the stability of the exchange rate. And we will do everything we can to continue to maintain it.
From the CBO Capital 10th Annual Investors Conference, it has been Otuaba Sebasekong reporting for Web TV.